What's going on, guys? Back, and today we got a brand new video on inflation. The numbers just came out, and of course they are terrible, and nowhere in sight does it look like it's gonna get better anytime soon. So going over all those numbers, how it affects everything, how the markets are reacting. But before we get into that, if you are not subscribed, make sure to smash that sub button because we are on the road to 1,000 subscribers. And let's jump right into this type of news here and see what some of these articles are looking at. So we can see right here the inflation rate came in at 6.8%. Absolute madness year over year. That's the largest in 40 years. You'd have to go back to 1982 to see inflation worse than this. And you see October 6.2%. So it's rising since October for the year over years. And then even economists expected 6.7%. They raised their expectations because October was so bad, and it still beat their expectations. But a lot of the market is looking at 6.8 and 6.7, saying pretty close. It was in line with expectations. So, we'll see how the markets go going forward. But it seems like they might just kind of be shrugging this off. And this is the big worrying part of all inflation, is the price increases in November were broad-based, so signaling that inflation is spreading beyond the handful of key pandemic-affected sectors that saw the most significant increases this summer. Could be more persistent than initially anticipated. Not if you were anyone outside of the Fed and government and politicians and all this stuff. Those are the only people saying inflation's not going to happen. It's transitory. It's actually good for you. And now they've retired the word transitory. So if you're on Twitter and on just people talking on there, everyone was saying this is going to be really bad. Inflation's going to hit hard. And the economists were the ones saying, these guys on the internet, they don't know what they're talking about. And look who ended up being right. Should tell you all you need to know. But this is a chart going back to 1980 of inflation. You can see 13. This is where it was massive, 14% for a while, 13 double-digit percentages. Are we heading back there? Who knows at this point? But where's it? 1982. About this one right here. So June of 1982, 7.182% is higher than where we are right now, and you can kind of just see that's just a massive upslope, no inflection point yet, nothing going to the downside, no correction or anything. It is all looking very poor, not looking like the greatest spot to be in. And it's honestly doesn't look like it's going to get too much better anytime soon. They retired the word transitory. They are admitting that they were wrong, and it seems like it's going to persist well into next year. And we'll see how that goes for, Bitcoin, crypto, the stock market, everything. We can kind of just do a quick overview of kind of how these things are reacting. So this is the 30-minute chart. We saw basically Bitcoin rally to 50K on the news, already back down around $47,000, $48,000. So nothing crazy going on there. But you see on this whole side, it's kind of a mixed kind of bag. There's a little bit of green, kind of flat for things, a lot of red. Nothing really crazy going on. Kind of flat for the majority of things. If we go into the market here, you can see the S&P, or this is the total stock market index fund VTI, basically flat, 0.42%. The S&P, 0.67%. So not moving too much, kind of shrugging off all of this stuff. So, we're not at all-time highs for any of these indices, but either Bitcoin either. And this news just kind of seems like the market is expecting it at this point. You can see this is the exact CPI numbers, 6.8% for the month. This right here is going to be big to talk about, 4.9%, because yesterday, before the numbers were even released, we had this tweet going out and Biden saying U.S. inflation data due Friday, obviously today, will not reflect recent drop in some prices, including energy, because the gas prices, they're plummeting. They're down like 2 cents, just plummeting. So you can actually look directly into that and say, he's kind of saying, ignore the numbers, it's fine. They're really bad, but they're not taking into account the energy. But you can look at all items less food and energy. So if you don't want to eat and don't want to use electricity or heat or anything like that, you can use this metric. I don't know why it's even a thing, but it is. So 4.9% was the rise in this whole thing. So kind of saying, don't worry about these numbers. They're fine. They don't take into account the drops in these prices, but there is something that does. And we can go to this kind of chart and see that, wow, it doesn't look very good, not coming down. And it doesn't include gas prices, energy prices, food prices, those things that are going up the most. And it's still going up. There's no inflection to the down point. We could have had one. It was a fake out, completely still going up. So this whole kind of notion of don't look at the numbers. They're going to be really bad. But remember, these costs are coming down, but they're just not. They're just not. So it was if you know to look at this stuff and not just look at the broad like headlines and say, well, it doesn't take into account this. These numbers do, and they're still not good at all. And if you look into all these countries, obviously where the U.S. ranks kind of global inflation rates right here, you can see all these different countries in the top. Japan basically flat. They're not a great thing to look at. They've been deflationary for a very long time and like a crisis for their currency and everything. But all the other countries kind of doing their own thing around 2%. The normal things you want to be. You start getting up here 3, 4. Okay, where's the U.S.? Wow, 6.8%. The U.S. is top 10 in the world. It is at number 8 in inflation rates, only topped by equal Poland, Mexico, Russia, Brazil, Turkey, Argentina, and Venezuela. So, Turkey's having a currency crisis right now, currently absolutely evaporating in value. Argentina, not an economy and thing you want to compare yourself to. And Venezuela, I mean, we know that they knock off like 7 zeros of their currency every year. So just not very good company for the U.S., just showing the monetary policy, everything they're doing, not good. It's they were wrong about their outlook. They were proven wrong, and then they continue to just not have any options at this point. Even if they want to raise interest rates, stop quantitative easing, do all these things, the debt is so massive that they can't do that. They have no way to raise interest rates because then they can't pay the debt. And if you can't pay the debt, then the U.S. defaults, then you're in a massive problem. Way more than what inflation is going to do because the currency value is going to plummet. But so they're just between a rock and a hard place at this point. Been reckless spending for too long, and now we can see coming back to bite us. You have to continue printing money, continue quantitative easing. They've outlawed bear markets in the stock market, and that's why you just see the inflation continue to get worse and worse and worse, and they don't really have an out at this point. But just one last look at these markets. Obviously, Bitcoin really hovering here. We're kind of seeing where it goes from now. I think we'll continue to see bad inflation. We're at this point in a macro trend right now where we're at the end of the year. Hedge funds and these investment firms are sitting on large unrealized profits from probably Bitcoin or crypto stocks, everything from risk on. So they're going risk off, locking in profits, and they'll probably come back in the beginning of next year. So the first couple of weeks of January will show how these institutions are going and see if they're moving back into Bitcoin, back into crypto, back into risk on assets to start a new year. That's probably what the move is going to be for them. But as an overall market, you can see mixed in tons of red. These risk on, talk about plug a lot. This is down. This is a risk on stock. Even Tesla's actually up decently. But all Apple, when you see Apple moving, continuing to make new all-time highs, up almost 2% today. Apple is a complete safety stock. When there is fear, when there's uncertainty, doubt, anything in the market, the money floods to Apple, and we see, I just have to keep moving this all-time high line up because it continues to break it basically every day at this point. So When the apple's pumping, you know there's a little bit of fear in the market. But that's the inflation look. It is not good. No real end in sight. No inflection point yet. And 2022 probably going to continue this trend, especially as we read in that article that the broader based kind of things are starting to hit by inflation. Companies waited to inflate their prices because they listened to the Fed saying it's transitory. So companies said, I'll eat the cost for 3 months, 4 months, and I'll make a little bit less money to keep the prices the same. Now they've retired transitory. Those companies are saying, well, I need to make money now. They're going to up the prices. So we're kind of in that cycle right now. But that's going to do it for this video. As always, make sure to smash that like button and subscribe because we're on the road to 1,000 subscribers. See you guys in my next